547, acknowledgement by the order. Town of Aurora acknowledges that the Anishinaabe lands in which we live and work are the traditional treaty territories of Chippewas and King Island, as well as many other nations whose presence here continues to this day. As the closest First Nation community of Aurora, we recognize the special relationship the Chippewas have with lands and waters of this territory. They are the water protectors and environmental stewards of these lands, and as a municipality, we join them in these responsibilities. Further acknowledge that Aurora is part of the treaty lands of Mississaugas and Chippewas recognized through Treaty Number 13, as well as the Williams Treaties of 1903. Shared understanding of the rich cultural heritage that has existed for centuries, and how our collective paths across where we are today help to walk together to a better future. And motion for the agenda. Any comments or questions? All in favor? Opposed? Carried. Any declarations of pecuniary interest? Seeing none. See the minutes and motion to receive the minutes from September 16th, 2025. Any Harold? Comments? In favor? Opposed? That carries. Hey, no delegations, matters for consideration. One memorandum from Supervisor Accounting regarding 2025 audit finding report.
So this evening here, we have with us, we've met Elizabeth and Jason many times. We also have Michelle, our accounting supervisor, and our auditor, KPMG, Kevin and Hitesh. Kevin and Hitesh are going to do a presentation just outlining what the audit plan is for the 2025 financial statements. Turn over to you guys.
Thanks, Rachel. Good evening, everyone. So we're going to speak to the key items within our audit planning report. This is the first of two documents that we're going to present to the town. The second, of course, will be once we've completed the audit, we'll be back to present our findings. So in terms of hitting the highlights, perhaps we could start at the slide entitled Audit Highlights. So this is slide number 4, please. Yeah, thank you. So these are the items we're going to speak to today. We're going to talk about how we determine materiality, the fact that the town's audit is what we refer to as a group audit. That simply means it's a consolidated audit, and of course, the library forms the other part of it. We're going to talk about the areas of which we are going to apply our audit focus, and we're going to talk about the presumed fraud risks that exist. These are not town specific. These are via the standards require us to consider certain fraud risks. And we're also going to touch on one of the items in the appendices in terms of our planning presentation. And then, of course, Hitesh and I'd be happy to respond to questions that you may have. So we'll start by asking if we could go a couple slides into material. This will be slide number 7, initial group materiality. One person, yeah, thanks. So materiality we set based upon forecasted revenues. And so it arrives at a number of $4.1 million. What this means is that if we had uncorrected differences at the consolidated level, which either exceeded or even began to approach that number, we'd have a difficult time providing an unqualified or clean audit opinion. That's never been the case in terms of your audit, but that's the way that what materiality is initially used for. It's also used for scoping. So when we're doing our sample sizes, it will drive sample sizes. You'll see reference to what we call an audit misstatement posting threshold of $205,000. So that's derived from the 4.1 million. And what it means is that if we have any audit differences above that amount, whether they're corrected during the course of the audit itself or uncorrected, we would report that back to the town as part of our findings report. Items that are below that number, we would consider to be clearly trivial to your financial statements taken as a whole. However, it doesn't mean we simply ignore them. We would consider the root cause of any difference of any value. So for example, if there was an audit difference, let's say it was $150,000, clearly it's not material to your financial statements. However, if it was indicative of, say, control that either was missing or wasn't operating, we bring it forward as an opportunity for strengthening your controls. And then similarly, if we found an error of any dollar value, which we considered might be of a more sinister cause, we've got responsibilities in that case too. And just with respect to materiality, I should also point out that this is based on forecasted revenue. So when we come out to do the year-end work, and we'll have the year-end values, if we need to revise that, we will. And if we revise materiality based on the actuals, we'll report that back to you. We can move to slide 9. Just with respect to the fact that you have items, your employee future benefits listed on your balance sheet with respect to, it's an estimate as to what those values, what those programs are worth, requires management to employ an actuary to help assist in terms of determining the actuarial value. And then in turn, we employ our own actuarial specialists to look at the material that comes from your actuaries. So that's just an indication that we have the involvement of others. The next slide, I'm not going to spend any time on in terms of scoping, just talks to the fact that the town itself makes up almost all of its consolidated balances. The library comprising just a small value of it. The library does have its separate standalone audit itself anyway, even though it's not, we don't subject it to audit procedures as part of the town. So we simply pick up those numbers, but they are audited as part of the library audit. So the next slide speaks to the risk assessment, and I'm going to speak firstly to the fraud risks, and then Hitesh will take you to the next part of the document. So we can go one more slide to management of revenue controls. Next slide, please. Yes. So I mentioned earlier, this is not specific to the town, but moreover, we are required to presume that there is a fraud risk that relates to management's ability to override internal controls. We are then required via the standards to design and perform procedures to sufficiently mitigate this risk to an acceptable legal level. Typically, we do that from looking at journal entries. We look at them through a lens of the riskier type journal entries. We ensure that they're either backed up through business rationale and supporting documentation. We will report back if there's any issue noted through the performance of these procedures. The next slide speaks to revenue recognition. So this is, again, there's a presumed fraud risk relating to improper revenue recognition. We are permitted in the case of through the standards to rebut that risk. So that is to say that there is a fraud risk related to revenue recognition, and we do that. It's typically meant for if you've got, say, large public companies where they may or management that may be compensated based on revenue growth. Not the case in the case of cities, municipalities, or public sector type organizations. So typically we rebut that. What it doesn't mean is it doesn't mean we don't perform procedures on revenue. In fact, Hitesh will talk to that a little bit, what he presents, but we do quite a bit of work on revenue. It just means we don't consider a fraud risk relating to revenue recognition itself as well. Okay, with that, I'm going to turn it over to Hitesh, who's going to take you through the next part of the document.
Thank you, Kevin. Can you go to the next slide? So there are certain balances to the financial statements that are material. So we're performing certain audit procedures, substantive procedures on that. For example, for the cash, we'll be doing the confirmation from third party, we'll be sending the direct confirmation to the banks to see if the balances tie out to the financial statements. And for the TCS has the major balance on the financial statements. In that, we'll be inspecting the amortization policies, if it has been done correctly or not as per the PSAS. Or we'll be doing the substantive procedures on the additions or the deletions to see if that has been correctly recorded or not. And for the revenue, since as Kevin mentioned, so we'll be testing over the revenue recognition compliance, that revenue has been recognized as per the criteria. Or for example, for the grants, if it's a restricted grant, we'll see if the criteria has been met or the construction has been done or not to recognize the revenue. Or like for employee future benefits, like there are certain liabilities for employee valuations that we've recorded the year end based on the actual report. So we'll be engaging this KPMG specialist to see if the liability has been recorded correctly or not. And then we have certain balances for the accounts payable, accrual liabilities. We'll be performing the search for the unrecorded liabilities and all the invoice testing over that. So these are the balances that are material to the financial statements, and we'll be performing all the audit certain procedures on that. So can you move to the next one? Yeah, this double. Yeah.
Thanks. So I'll take it from there. So I intentionally didn't have you guys go through every planned approach. So just thought I would share that with you and give you some examples of the way we intended to tackle some of the key audit areas. This slide here speaks to we are required as part of the standards to make direct inquiries to those that have governance over financial reporting with respect to their knowledge of any fraud that may have affected the town during the year. It's typically a bit of an awkward conversation in these types of settings. So let me just talk about the process and then provide an opportunity for members of the committee if they want to say anything or explain the process. So we would also go about, we make these inquiries of management during the course of the audit, as well as when we're back at year end. And also we perform our own procedures. So had we become aware of something, members of this committee would have heard from me directly in a direct private setting prior to this. If members of the committee have any specific concerns or knowledge of anything that they believe would be either a known instance of fraud or an allegation, they can always contact me directly. My contact information is available at the beginning part of the document. But we are required through standards to make direct inquiries of members of oversight with respect to that process. If we can go to the next slide. So this slide speaks to our timeline. We have talked in terms of what the timeline looks like. We are scheduled. We expect to be able to deliver along with your expected timelines at the end of the year, as well as we're actually performing our interim testing and planning right now. Things are going very well, my understanding. So thank you very much. And then what I think I'll do, if it's okay, is I'm just going to skip directly to one of the appendices to talk about upcoming accounting standard changes, and then I'll pause for questions. So if we go to page 26, I think it's. Yeah. Great, thank you. So you'll see a standard here, the second item here, financial statement presentation. So this is public sector standard 1202. When this is required to be adopted, and the first time you'll see it live will be your 2027 financial statements, although your comparatives will have to be restated in line with the new standard at that time. Your balance sheet will look very different. So this standard change won't change your bottom line, but it's going to change what I call a lot of the geography within your financial statements. Right now, your balance sheet looks like you've got financial assets, you've got liabilities, you have a number called net debt or net assets. You then add to that your tangible capital assets to arrive at accumulated surplus. What's going to happen now, or in 2027, is you will have a balance sheet that literally is a balance sheet. You'll have assets being equal to your liabilities, plus instead of accumulated surplus, we're going to now start calling it net assets, which is good because the term surplus might have different meanings. When you consider budgetary surplus, for example, has a very different meaning than what it means in your financial statements right now. So that change is coming in 2027. There are going to be opportunities to early adopt, should the town wish. Some of the other changes that are going to take place is that net debt, net assets line that I talked about won't be on your balance sheet, but there'll be a separate statement that identifies that value going forward. So that's a change that's coming in a couple of years. It is going to be a bit of a heavy lift because it will move things around, and your statements will look different. But as I said, it will not change your bottom line anything. It just moves things around a little bit. The other item I'd like to highlight in terms of an accounting standard change, move to the next slide, is with respect to employee future benefits. So right now, when you go look at your employee future benefit programs, when it comes to post-retirement benefits, the actuary helps determine the estimate. Every 3 years when that standard is performed, you will have at any point in time what we would call unamortized actuarial gains, for example, or losses. And right now, those stay off balance sheet and they work their way into the balance sheet as they're amortized over the remaining service life of the affected employee group. What this standard change wants to do is no longer have anything unamortized. So any change, if you have a valuation change and what that estimate looks like, it will immediately go to your balance sheet. And that being said, that could cause a high degree of volatility. So what they're going to do is the volatility will, instead of going through your statement of operations, will go through your statement of remeasurement gains and losses, and will only come into the statement of operations as it's amortized. So the balance sheet, there'll be no longer anything off balance sheet as it relates to that obligation. So that in itself is considered to be a good thing because your balance sheet will always say what the value of that obligation looks like every time you have a valuation performed. The other item that's something that the Public Sector Standard Board has considered, and I do not believe will be part of the final standard, is that they really don't like the fact that right now municipalities participate in what's called a multi-employer plan when it comes to owners. That is a defined benefit plan, but because it's multi-employer, you account for it as if it's a defined contribution. So you have nothing on your balance sheet relating to the overall funded status of that plan. The Public Sector Standard Board would love for you to take the town of Aurora's portion of whatever that number is, put it on your balance sheet. I just don't believe it's practical, so I don't think you'll ever see that. So I think you will continue to report for it as if it were defined contribution, meaning that the impact will be whatever your contributions are every year will show up as an expense in your financial statements. I do not believe it's practical to accurately portray. When it occurs will actually be, it's expected to be approved next year, such that it will be required to be adopted for your 2030 financial statements. So certainly down the road. So I know Hitesh and I speak kind of quickly, but those are all the items we want to focus on in our presentation this evening, and we'd be pleased to respond to any questions you may have.
You were speaking fast because you want us to a lot of that stuff to go over our heads.
No.
So just the last item, the new accounting standards. So starting next year, there's going to be a separation of financial and non-financial liabilities.
Yes.
So as an illustration, DCs or deferred DCs now will look like will get a non-financial portion because receiving monies and then liabilities as a service that we're going to be offering in the future. So would that be an illustration of something that's going to be under the non-financial liabilities column?
That's a terrific question. I believe actually it will show as a financial liability because the way that you settle it, so it really comes down to how will you settle that liability. When it comes to the obligation relating to the DCs, they're earned as revenue as you spend money on the qualifying items. So that liability. So I believe that will be a financial liability. But if you had, I'll give you an example of a really easy one to understand in terms of a non-financial liability. Someone pays in advance for swimming lessons with the town. So that'll show up as deferred revenue as a liability, but it's non-financial because as they show up to take their lessons, that's how you'll extinguish that liability.
Seeing. So I'll start from the beginning then. So our involvement with One Invest. So what's the degree of auditing or due diligence team in our involvement with One Invest, because they're audited themselves.
So yeah, One Investment and One Investment Joint Investment Board do provide audited statements to us, which we can forward to them.
And we confirm the holdings too. So we will send out a direct third-party confirmation.
In terms of materiality, it was set at 2.5%. Is that, I guess that's the best practices within the industry to have 2.5%.
That's very common, yes.
These questions are for when you guys come back in June. So what are the risks of detection risks? What are the risks that KPMG won't or can't detect material statement or in the internal processes?
So with respect to the accounting or the controls?
Controls.
So, that's a good question. We perform what I would say is largely a substantive based audit, meaning that we're doing a lot of taking involvement rather than attempting to rely on a control environment. However, we are meant to have and understand, have auditor level knowledge of your internal controls so far as they support financial reporting. Typically, what happens is if we found errors, that would be indicative of control weaknesses. So we don't do a lot of control testing. It just doesn't make a lot of efficiency sense for us. So it's possible you could have control weaknesses that we wouldn't identify as a result of our audit procedures.
And you kind of hinted at because if there's misstatements in revenue generation, or it's not a big risk for us because we're not bonused, staff are not bonused on revenue generation. So what is typically like the highest risk areas for governments that you guys are focused on? Because in private corporations or for profit, it's a different story there.
Yeah. So I just want to make sure I make clear my comment with respect to the revenue risk. It's fraud risk, specifically I'm speaking to. But typically where we find risks of error in municipal financial statements center around areas that are not necessarily dealt with all the time. So really, you perform a balance sheet review in a real rigorous type sense once a year. So most municipalities, December 31st is when you're preparing a balance sheet and going through all the cutoff procedures. So items that relate to cutoff could be an error. Deferred revenue could be an error. So when different departments try to determine how much of the funding that they've received has been earned or not earned. Prepaid expenses, any of those items that focus around straddling your year end, those are the areas that we do tend to find errors if there are errors. So those are risk areas. And I'd say areas that we spend a lot of time on to ensure that they're done correct.
In terms of your evaluation of business rationale of significant unusual transactions, what's the process that you guys go through? Like, do you guys interview staff, obviously? And you look at transactions, what's the sample size that you guys look at? I mean, what's a significant sample size that you would catch these abnormal transactions?
So there's a couple of ways. So first is we'll apply a filter with respect to what we consider to be high risk criteria. So the high risk criteria could be, for example, and we'll apply a number of different risk criteria. So it could be the timing of when the journal entries are posted. So are they all posted around year end? Are they posted around certain period end dates? Do they have odd numbers associated with the entries? Are they odd pairings of accounts? So for example, are they assets or receivables with deferred revenue, which we talked about example why you would have that today, but that would be an unusual pairing of a particular journal entry. So we'll do a filter based on high risk criteria. And do we have a minimum sample size for journal entry testing itself too, Mitesh?
It would be like for the management override controls, we'll have at least 5 samples, depending if the statement will be extra 30 samples.
Right. So we go through that process, and then in terms of what we justify, we will not only ask staff about the reason why these entries are booked, we'll then look for it to be corroborated with additional evidence. So whether it be third-party documents, whether it be reference to certain council minutes that are directive with respect to certain things. But areas that touch on areas of estimate, those are areas which would also be indicative of a higher risk. And we look for areas of management bias that may be attached to those estimates too. And typically the way we'll do that as well is we'll look back at last year's estimates to see if the policy or if the procedures that we used in the estimation techniques led to a good estimate, or if they were again indicative of a bias in one particular direction.
One of the areas that council asks a lot of questions to staff is the area around procurement. Do you go as part of your process going through our procurement process, get some samples in terms of some procurement that we've had for fleet or any other capital goods? Do you guys go over that and seize and review whether it was done properly or it was the best decision, so on?
So the short answer is no, that's not part of the scope of the audit. We're objectives with respect to financial statements taken as a whole. However, every year we'll also apply what we call an element of unpredictability. And sometimes that's the type of procedure that we might perform. We'll look at various capital awards, et cetera. But what you're touching on is something that you often see in internal audit types.
And we have done internal audits on things like procurement, cashier, accounts payable, number of those types of things in the past as well.
But we do a great deal of substantive testing on whether they be capital assets, whether they be operating type expenses. And some of those items, if there were issues, might fall out of that testing too. So while it's not the initial objective of that testing, it's possible as a byproduct of that testing, you could identify issues in that area.
The area of Bill C-59 was implemented, it was said June 2024. Do we have ESG processes in place?
I don't. What is CSG being?
Environmental, social, governance.
From that, I don't believe that they have financial statement implications. So we don't have any disclosures on the statements or anything within the audit related to that.
Because Bill C-59, it's mandatory, but there's a 12-month grace period. So it doesn't, now it's November 25, shouldn't all municipalities have implement Bill C-59 with ESG?
There's not a requirement for municipalities to report anything. The disclosures that are required are with public companies right now in Canada. But I would say those municipalities that had previously commented or disclosed items related to, say, climate change have taken a step back for fear of the greenwashing stuff. So because anyone can make a complaint, and if there's a complaint, it has to be investigated. And it's going to be drawn out, and there could be fines levied. So those municipalities that had previously, through their financial reporting, started to make disclosures with respect to whether they be carbon emission targets, et cetera, have recently backed off. But I will say the International Public Sector Standards Board has an ongoing project, and they're looking to advocate to recommend various countries mandating their own public sector accounting standards, some degree of disclosure with respect to climate change risk, et cetera.
And I just, that bill was it was focused, that standard on manufacturing was a major component of it. And I think that's why we kind of consider ourselves completely outside of the scope.
And there's a discussion among the treasurers.
Yeah.
Of the region, and we found that it wasn't something that public was.
Now, in terms of town-owned properties, does KPMG review how we have the ability
So they do review all of our tangible capital assets, so they review our additions, disposals, it's part of their sampling and review, it's a very big component that's included in it. Specifically, if we have large purchases in here, so if there were land purchases, those types of things, they would get disclosed immediately, and be reviewed. When we have huge additions from our construction projects, they all get reviewed as well. We also have a component for properties that we own that have asset retirement obligations, so those get reviewed with our estimates and on an annual basis as well.
And also the assumption of any new assets.
And does KPMG also, with assets, depreciation is a big factor, especially when it comes to asset management plan and our capital budget. So do you guys look at our depreciation rates to see that it's appropriate, it's industry standard rate that we're putting in? So
Yeah, that's absolutely part of it. So what we do is the depreciation, we look at the various rates to ensure that they make sense in terms of management's best estimate of the useful life of the particular asset.
And I guess this is to you, Rachel, do we have a whistleblower program down?
I think that might be more of a question for Patricia.
Okay. And staff know if we had a whistleblower program, like everybody? Because it would be widely marketed to utilize this phone number if there's something that you find fuzzy and you want to report.
Certainly larger ones do. It can be tricky because it can be, first of all, it can be very costly. Typically what happens is certainly mid-sized municipalities will typically have a third party administrator. And so there's a fee for that. It's not cheap. And then you can set up how it reports. Typically they report to a member of this committee directly or someone else that might have considered to be independent of the various items for which they might receive complaints. I would also suggest at first, most organizations, when they first implement a whistleblower policy, they get all kinds of complaints that may not be what the intended process was. And you have to determine whether or not you want to permit confidential complaints, or even in this case, some places or some complainants would want to have like someone close the loop for them. So there's all kinds of options available. I would say it's certainly best practice to have some opportunity for individuals to have the opportunity to lodge a whistleblower complaint if they believe there's perceived fraud.
Last two. It was interesting near the end of the deck, mentions other services that specialist reviews that you guys have, like cybersecurity, IT risk and facilities and real estate. Do we have like auditors review our IT and our
So-
cybersecurity?
We do a separate cybersecurity audit with the cybersecurity firm on a regular basis, so we do share the fact that we do the audit with the auditors, but that information is kept very confidential, so we do refer to them who is doing it. I believe it's last times.
I will share with you the types of conversations we're having with municipalities in that area these days are, I think we're well past, everything you're doing to protect yourself. A lot of times the discussions are, what are you prepared to do when there's an issue? You look at what happened to Hamilton a couple of years back, whether it's Toronto Public Library Board, the zoo. It's inevitable in the public sector that there is someone attempting to breach your firewall probably on a daily basis. So it's do you have a playbook if and when you have a breach? So that tends to be more along the lines of the conversations we have with municipalities these days. But it's also awkward. You want to be careful about things you say in public because it doesn't take long once you becomes an idea for someone then, right? So
We do a regular audit of cybersecurity. It is key.
it's also tricky these days because what you find is the insurance programs, the premiums have gone up and the coverage has gone down. But it's interesting to see the way a lot of the insurance for cyber stuff have evolved, where part of the coverage is that they provide breach coaches as well in the event that you have something. So organizations can be mobilized as quickly as possible.
And last services that you guys mentioned is benchmarking, data analytics, plotting place and location. Example given is snow plows and complaints driven by poor service and so forth. How is that different, Rachel, than when we have where's my plow and our Access Aurora, they track I think we track where complaints are coming from. Do we have those in analytics? Because I thought KPMG offers analytics and benchmarking and so forth. I'm just wondering whether that's something that would be useful to us.
We do collect a fair amount of data, but I know with the implementation of new CRM, we're gonna have much more information at our fingertips. So I think over the next year or so, we're gonna see that we're gonna be able to actually track and monitor a lot more things that we just don't have the capabilities to do right now.
And just even to speak to that, one of the things that we've done with some municipalities is been a service where we refer to it as dashboarding in a way, in the sense that you are producing an enormous amount of data, more than you ever have before, and it's exponential, the growth of it. So imagine municipalities that have, whether it's the e-bikes, the scooters these days, you can have data of where these things are picked up, where they're dropped off, what's the most efficient location to have these at to maximize the use. As a very small example, but there's so much data that's being produced, and you can where are these people coming from, whether it's your, the town theater, the different facilities, who's using these facilities, where are they coming from, and you can develop KPIs, the way the various departments use to run their businesses, and the real KPIs. So sometimes KPIs are determined based upon they're easy to calculate rather than the ones that really are useful to run our business. So there's all kinds of little areas like that with respect to data. We're finding some municipalities are very well.
So you guys have the ability to track who's using our library or culture?
In some cases, depending on the data that's being collected, and sometimes you're collecting more data than you know.
Did you want to ask anything? No? All right, but,
Yeah.
Gentlemen, thank you very much.
Yeah, so much. Appreciate it.
Sure, yeah. Favor? Opposed? Carries.